Welcome to the channel. Yesterday our discussion was very clear. Day before yesterday's trading session, we did not get the market as we anticipated. We did not get the market down to our demand, nor to our supply which we had marked. See, this is what I always say. This is complete consolidation. If you had entered in this market, I'm pretty sure you would have faced losses only. Why am I saying this repeatedly in every single video is you need to have a plan. See how the market structure is. I already told this in the previous video, but I'm just rephrasing it. Market came down, pulled back, market came down, right? So this is your effective high. Now market broke the structure and gave a closing properly. Now what is market doing? Market is just consolidating. Where is market likely going to go? If this positive breakup structure is going to hold, market is going to go higher. So if market is going to go higher, what does it need? It needs a demand, meaning it means a bigger players entry where the market was likely bought earlier, right? This is why we always mark the demand, and the beauty of this market now is there is relative equal lows. This is what we call it as liquidity. So if I mark this as liquidity here, and if market has to hunt this liquidity, my always perfect setup would be whenever liquidity forms in the market, how market will behave is market will come down, right? Every player will think like, okay, market is going to go down because it broke yesterday's low, and then market what it will do is it will give a small retracement, then come down and hunt this demand, and then will start to move up. This is how liquidity works. So why does what is the actual meaning of liquidity? Liquidity is nothing but orders. What does orders mean? Whomsoever has entered the market in this place, they would have kept a stop loss below this place, right? So this is basically sell orders. And whomsoever is going to enter the market when this level breaks, it is again a sell order. So these people would have stop loss above this level, and buyers would have stop loss below this level. So market will react to orders. What does it mean? So when market comes down, it'll trigger a huge amount of orders by both buyers and sellers out here, and then when all their stop loss are being hunted, then it will move up in the direction which the market wanted to go as part of the overall trend. So my ideal position for tomorrow is only this. I'm not going to discuss all of the scenarios as I used to discuss. So if market opens flat or small gap down, and if market comes down and taps into this demand which is marked at 540 level or 530 level to be precise, this is in 30 minutes time frame, by the way. If we get the market tap into this, and if market gives a positive reaction from here, I am interested to take the market higher all the way till this supply, open supply which we have. Or if you wanted to play it safe, we can even target to the swing point whichever we had it earlier till 25,900. We can target as initial target. This itself is like more than 400 points, which is pretty insane if market gives a very big momentum tomorrow. And if market continues to go up and breaks this, it will create even new higher highs, meaning it can, for the upcoming trading week, it can even cross all the way till 26,400 also. It is easily possible. Market can do anything. See, whatever it is, let market do whatever it wants to do. Your goal is to make money from the market, so keep your lot sizes as small as possible. I am repeating this in every video. You can invest as low as possible, even from 10,000 or 15,000 or 20,000, whatever amount you wanted to invest. You can invest as low as possible. The reason why I'm saying keep your lot sizes small is, if losses happen, meaning if you get a tap here and if market drives down, you should not have a bigger loss. This is possible from the market. Anything can happen in market. This is a game of probability, right? If this breaks down, then we can plan for future selling options from this zone itself to higher new lower lows. That is how market will behave. Our prediction is in such a way that we are taking a calculated risk, saying like, if market gets a tap here, meaning like our position will be something like this. If we get a tap here, we don't need confirmations, to be very honestly speaking, because this is already in an uptrend and currently market is consolidating. So our ideal position would be something like this. This itself would be close to 1 is to 5.89 or 1 is to 6, which is a very, very beautiful trade. And if we extend the target up to here also, it is 1:8, which market will give so much big movement in one single day? That is close to impossible, right? If market decides to give, it can give. We cannot say no to that. But if you wanted to capture this big move, the reason why I'm saying keep your lot size small is you can hold your trade longer. That is the only reason. If your quantity size is more, for example, if you have entered like 1,000 quantities or 2,000 quantities, the moment you see your profit hitting 10,000 or 20,000 or something of that sort, you will start to panic and you will start to place improper stop losses and start to trail before even the trade hits your target. So why do you have to go that route? Like this will, if you reduce your lot sizes, if the market goes in your direction, you can hold it till the target which you have planned out for. So keeping the video short, I'm not going to discuss for the downward direction for tomorrow. This is a trade I'm going to plan for tomorrow. If it comes, well and good. If it doesn't come, I'm not going to trade. Simple. Make your trading plan as simple as possible and stick to your trading plan as much as possible. Keeping the video short, if you like the analysis, make sure to like the video and subscribe to the channel for more such educational content. Thank you so much for watching. We'll meet in the next educational video.